Welcome back to Stock Talk Trades. We are going over Matic in this video. As you can see, I've already done a few support and resistance lines. See, we had the top of this wick of this candle, and we have this consolidation period, or preferably cup and handle, I guess you could say. It's hard to see on this long time frame, but we had this nice cup. This red candle pulled back all the way down, and then that's when we ran. So what we can do, and it actually works out perfectly, is that we measure this to 34 up to the top, which is around 34. See, so that's a very good way of finding a price target. So again, you don't want to just, if I measured this as 34, I would honestly take my profits at like, I wouldn't take it at 34. I would take it at like 30, 33, just so I know I'll get filled and actually take my profits. So where can we go next? What's going to happen? Well, that's what we're going to find out and see what can happen. So we did have a nice sharp run up. Again, kind of something similar to this. Have a nice pullback to the 20 EMA. So I could very well see it pull back to the pullback for probably around 2 weeks. So let's go. This was around, till we actually broke up, around 15 days. So I wouldn't be surprised one bit if we came all the way up to there and before actually breaking out for a little bit longer. We did somewhat form a falling wedge here. And I mean, essentially, I don't know. It doesn't really matter how you measure it. You just know the cup and handle, falling wedge, or pulling up to the 20 EMA. Whatever edge you use, it's going to work. Falling wedge, there's wedge and edge. Edge is moving averages, support and resistance, anything that gives you a higher probability in the market that it's going to go in your favor. Not a falling wedge is a pattern that looks something like this. And the stock will bounce in and out. And this is usually a bullish sign, pop out, possibly test the support, and then that's when it goes up. So they're two huge different things. And that is actually an edge. A falling wedge is an edge in the market. Let's go ahead and take a peek at some Fibonacci levels here. We got the low here. We're in an uptrend. So again, all we needed to do is stay above this 50% level. And that's right on our support line. So that's perfect. And if it does come back, and I do believe it will, so I actually might take some profit and try to buy back, because this would be a 21%. I'd be able to get 21% more. That's something I'll probably do. And we will be able to continue to push up past this resistance. After, let's go and take a peek at some price targets. So if we could pull back to 38.2 in the 50% range, we do have a price target of 65 to 70 dollars. 165 to this 165 to $170 range. Sorry, I just think that's hysterical, because that is absolutely crazy, and I can't wait, because I bought all the way down here. How much is that for me? Oh shit, that's crazy. That's crazy. Oh my god. Oh fuck me, dude. That's awesome. I'm super excited. I am super excited for all that is to come. Let's go ahead and take a peek at some longer term Fibonacci retracements. So again, we really just need to stay above $83 for it to still be considered in a bullish movement, short term at least. If it breaks down, I'm gonna, like, this is just all scenarios in my head. I'm breaking it down. You know, I gotta prepare you guys for the worst. What's gonna happen? So, you know, we might find some support here, could potentially break down, you know, if it does decide to continue coming down. This is a key level, the 50%. And if it breaks that, finds resistance, and then continues in the move, that's not good. That's indicating that a downtrend will be incurred. And again, you're going to again, this is long-term investing. This is not a trader, because a naked trader wouldn't even use, like, they don't even have to use Fibonacci retracements. They would take their profits after it hit. Because if you've seen our last videos, we had a price target of this. Like, it's perfect. Like, you measure this, bring it up, and everything just works out perfectly. So naked trader will already take profits and are looking for that pullback down to at least the $1.10 range. So if you're, that's what I'm gonna consider doing. So we do have another price target if it continues to come down here. Anywhere, I think it's gonna come down to somewhere in here. Which is it's not bad. And again, this is this 2-week time frame, because we had this run up, 2-week time frame, and then another run up. So I'm guessing it could potentially be another 2-week time frame before another run up. I am looking for that pullback, and as this pullback does incur, this 20 EMA will again start to slow down, or not slow down that much, but you can see how it starts out pretty fast and then it slows down. And that gives time for this to pull back, and as that 20 EMA squeezes it up, we'll again break that up to that new $170 range. And then we'll get somewhat close to the 50 EMA, which would be fine, and the 200 SMA wouldn't really move much. It might not even be that crazy. But we are pretty overextended from the 200 SMA, which is not something that we like, but again, it's a moving average, and it's a lagging indicator. It's not something that really makes or breaks the market. It's just all about probabilities, and that this is I'm trying to explain it to you guys. I'm not too good at explaining it, but these are known as lagging indicators because they don't take into account what's happening in the market right now. They take into account what's happening in the past. So whatever the market's doing right now, it doesn't matter what these are doing. That's why naked trading and people trade with no indicators. That's what naked trading means. That's why a lot of traders do it, because you can find so many more things. Let me try to find an example. See, again, here, like, obviously these helped because these lines help because they're close and it has to pick a direction. But see an engulfing candle, this green engulfing candle, boom. Like made a new high, boom. Like made a new low, boom. Made a low, but then had 2 doji candles. That's usually an indecision or a reversal. So you'd really wait for that new high right here, or you could wait to buy in right here, find support, and then you keep going. I would say shooting star or hammer candles, but they're not good enough for me just because they're not by themselves. And yeah, so naked trading gives you so much more price, like gives you more in-depth analysis on the technical chart than moving averages or any other indicator. Awesome, I think that covers it. If you guys found value from this video, please consider subscribing. It helps the channel out a lot. And go ahead and comment down below what you want to see next. And go ahead and give this video a like. I will see you guys in the next one.